Okay, so this is the live broadcast room, and this is the chart and the notes that we update during the course of the day, along with the hot tweet alerts. So, building upon what we discussed this morning in the daily morning update, we showing resistance at 1702 and support around 1686. Now, this is basis the December E-mini contract. We have an area here of question, 96 and a half. So I want to continue watching in here because we saw in the previous session how it came back into this area and gave us a nice short opportunity, which we went long the puts. And then once we started to consolidate down here, we sold those and covered those. What we were looking for is the 1686 area down to support. Didn't quite get it yesterday. We had a profit going on, and these are weekly options. So these are very short-term moves that we try to capitalize on. And 88, like I said, we had a profit here, so we went ahead and took those off near the end of the day. Now, market rebounded this morning. What we were looking for is to get back down into support, look for a formation, and then get long from there. It didn't happen. Market opened to the upside and just continued up into this area again that we've been watching. So in this area, send out a tweet where we're considering. So you always get kind of a heads up as to what we're looking at throughout the course of the day. And I paint this text area a little different color so you can see the difference between the two. Because with that hot tweet, we'll also send out a picture file, which instantly you can look at the tweet, you can look at the picture and see basically what's going on and what we're looking for. So as this develops in here, if we get a reversal bar and if I see selling pressure coming into the markets, both on the stock side and on the futures, then we're going to be looking to execute this plan in here, and that is to buy the puts. They're trading between 275 and 310 in here somewhere, so it's going to perhaps be the same type of trade that we placed yesterday, in which we would be looking for a move back down to support here at 1686. So if this develops, I'll restart the tape again and update, and you'll get an idea as to how we progress along. Okay, we're several hours after I last stopped the tape. We've had a slow grind to the upside here throughout the day and never really did get the reversal bar and the selling pressure that I was looking for to execute getting long the puts in here. But what I was hoping, and I'd like to use this time to further discuss my trading plan. Prices came right up into this box that we highlighted with the plan, but again, did not give us the entry. If it did give me the entry, then what I would like to do is be able to buy the 1685 puts with the target of this market coming back down into support here at 1686. So I would have the 1685 puts on. At that point, I could do one of two things. I would actually do both. But the first thing I could do is take the profits and cash those out. It would be probably a doubling of what we bought them for. So if I bought them anywhere between 275 and 325, I would expect to get for these to be worth $6 at this point. Nice profit. Or the second thing is that you could take half of it off. You know, if you did a 2-contract set, you cash in one, and then on the other, keep that in place and then use the profits that were made on that first one and the profits that you have in place on the second one to add a call, a 1685 call. So you would end up with a straddle at that point. You'd have a long straddle that's financed by the market. Half the size of what we originally started with, but we would have a profitable position depending upon, and how profitable it would be depends on how far the market would move away from this price point. And so that's one of the exciting aspects and advantages of using options versus the futures. You can't do that with futures, but you can create these synthetic positions with combinations of options and really create a consistent way of pulling income from the market. We did the same thing last week. We had the levels in place, and throughout Thursday and Friday, oscillating back and forth between the levels, I was able to create some straddles and some strangles. And gee whiz, Sunday night when I checked the thing out and the market was up 100 and 120 points on the Dow, I thought, boy, that's a great way to start the week. Cashed those out. And as the puts came back here, I was able to close those out as well. Lost a little bit on the puts, but gained dramatically on the calls. It was a win, and I had no risk.